Maria, I'll hand it over to you.
All right, well, let's go ahead. We'll go ahead and get started even as more people come in. We have quite a few people registered for today. So I want to be respectful of our time. Hello, everyone. My name is Maria Colby-Wolf. I'm the president and CEO here at Washington Women's Foundation. Very happy to have you all with us. And I want to welcome you to our conversation today on values-aligned investing. As I hope you've come to expect from Washington Women's Foundation, I will be opening our gathering today with a land and labor acknowledgement. I acknowledge that here in Seattle, where Washington Women's Foundation is headquartered today, we are gathered on a stolen and unceded Indigenous homeland, and in the context of broken treaties and unresolved harms to Native peoples. We are on the traditional land of the first people of Seattle, the Duwamish people, and of the Coast Salish, the Stillaguamish, Duwamish, Muckleshoot, and Suquamish, who have made and continue to make their homes here around the Salish Sea. We recognize as well that we live in a nation of wealth, a wealth created by the subjugation and exploitation of African peoples brought to this land through chattel slavery. We honor and uplift the original Indigenous stewards of this land and the forced contributions from generations of Africans. This is an acknowledgement then of stolen land and stolen labor, and a recognition that the impact of these wrongs reverberates into our present day. Our acknowledgement does not replace authentic relationships, but serves only as a first small step in honoring with gratitude the land on which we live. Thank you. Before I give you over to our guests today, I do want to point out that the link or connection between this acknowledgement, how land and labor was exploited to generate wealth in this country in the past, and why we are here in the present talking about aligning investments or the generation of wealth with values, I hope that link is fairly clear. The relentless pursuit of wealth is precisely what led to stolen land and stolen labor. That pursuit is why we do acknowledgements of past wrongs here in the present. So how do we approach investing thoughtfully without depending on wide-scale environmental and human exploitation? This is the question that should murmur under our entire conversation today. I ask you to remember this acknowledgement as we go into this next hour or so to go together, because it is directly tied to our conversation. And I want to thank you for being interested in exploring this question. I know I am super excited to get started. So to kick things off, Aviva, Catherine, we're going to do a little poll. We want to just get a feel of who's in the room, and we want to know what your experience is with values-aligned investing. What do you know? You know all about it. You kind of know about it. You don't have any idea what we're talking about, right? But you're interested in learning more. Give that a few minutes or 30 seconds. All right, let's go ahead. Catherine, you want to go ahead and show us the polls? All right, so we have a little bit of everything, So I think we'll have a pretty wide-ranging conversation today. Hopefully, for those of you who don't know a lot, you'll learn something. For those of you who are experienced or somewhat experienced, you'll learn something as well. So let's dive in. I want to introduce Jennifer Seek. Jennifer joined Washington Women's Foundation in 2010. She currently serves on the Governance Committee and Membership Task Force and is a board member here with us at Washington Women's Foundation. She has also served on the Pooled Fund Grant Committee, several partner grant committees, the Impact Assessment Committee, the Intersect Planning Committee, all of those before she actually joined the board. Jennifer is also a wealth management advisor at Merrill Lynch in Bellevue, working with clients to transform wealth to life goals and making an impact in the community. Her education includes a Bachelor of Arts in Fine Arts and English Linguistics from the University of Hong Kong and a Master's of Applied Finance from Macquarie University in Australia. Jennifer is an alumna of Leadership Tomorrow and has served on various boards, including Washington Women's Funding Alliance, Mercer Island Rotary Club, and Mercer Island Youth and Family Services Foundations. All right, so to get things started, Jennifer, I'm going to cede the floor to you with my question. What brings you to this work and why do you love it?
I think that I'm going to use the analogy of like Washington Women's Foundation. So I think as an individual, sometimes you can do your philanthropy and want to change the world, but as a collective, the power is way more powerful, and it's part of the learning, and it's part of changing what is existing system and making a change as a collective. So I think excited about the ESG impact investing, value aligned investing. I think if every one of us start with that, with a good intention, and knowing that the resources that we're giving to us come with a responsibility. If everybody is looking at a good intention, try to do something, at least do no harm, and then change things in the world, I think we can definitely move the needle. So I'm excited. I am excited as a collective. I'm excited to be in today's conversation. So yeah, let's get started. So should I take the opportunity? I would like to welcome the two speakers today, Nancy and Sandhya. And if I can ask you to introduce yourself, because you would do a better job than I do, and then what attracted you to this work, and what made you excited? Nancy first.
Oh, okay. Hi, everyone. I'm Nancy Reed. I'm an independent consultant in Seattle, and I help folks find their way through impact investing and values-aligned investing themes. Why I do this work is, there are a bunch of reasons. One is that it feels like we're living in a time when the problems of the world that used to be very abstract are feeling very real. And for those of us who live in relative comfort, it's not that comfortable. And only by digging into the power that we do have and aligning that a little bit, maybe every day, a little bit more closely with a less harmful way of being in the world, can we try to help people feel a little better? It certainly helps me feel a little better. So that's one of the things I really like about this. It's also very autobiographical for me. I grew up confused about money and power, and I think a lot of us did. So to be able to help interrogate some of the assumptions that underpin our power structures is a little bit personally healing for me. So that's why I love what I do. Thank you, Jennifer. Sandhya.
Thank you, Nancy. Hey, everyone. I'm Sandhya. I use she, her pronouns. I am the managing director of Community Credit Lab and Common Future Investments at Common Future. Common Future is a national nonprofit. We are an intermediary. We work with partners on the ground and connect them to funding sources. We are a funder and investor ourselves, and I lead that work. I lead the impact investing work at Common Future. What brings me to this work is a deep sense of an understanding of the injustice that we move through the world with. Our economic systems are designed to benefit the wealthy at the exclusion and extraction of communities of color. Maria's welcoming statement and land and capital and workers' rights acknowledgement really hit the nail on the head there. And our financial institutions are, they don't work for everyone. They don't work for people of color. They don't work for poor white working folks. And I truly believe that for us to build an equitable and an inclusive economy, we need to start thinking differently. We need to break down the frameworks and break down the systems that we operate in and start lifting up new solutions that are community-led, that are led by people who are most closest to the challenges that they face, and invest in those solutions. And so I'm here because I deeply believe that it's possible to create a more inclusive economy and a more inclusive financial system. And I want to be a part of that. And I invite everyone who is here in this call to also be a part of that change.
Thank you, Sandhya. So I think it's maybe we can actually, on that tagline, I think understanding the limitation of the whole financial system, right? The world is actually set in a certain way right now. Hopefully we can change it, and we are on the way to change it. But it may be good to get a good understanding from Zendaya what the community credit lab is doing and what is it different and how can it be so different from the existing financial institution as you mentioned. So do share that with us.
Yeah, thank you. Thanks for that question. So Community Credit Labs is now essentially the investment vehicle of Common Future. And I'll share first what makes it different from maybe most traditional financial institutions. We focus on three things. One is access to capital. The second is the affordability of capital. And the third is shifting and building power. So access is actually a common, access to capital is a common theme that we see even in the mainstream financial institutions. People are always talking about how do we increase access to capital? What does it mean to increase access to capital? From my work in the financial sector, what I saw often was the frameworks that we use in the traditional, more mainstream financial institutions. When we think about access, it's more about how do we maybe just expand the credit box that we use, maybe make it a little bit bigger, lend or provide capital to people that we wouldn't necessarily normally do, but we'll still use the same frameworks of how we distribute capital. And really that is problematic because it just continues to perpetuate the system of something as simple as risk-based pricing, where we charge more for people who have fewer resources to access credit. And so if we make that credit box a little bit bigger, we're charging people more, and those people have fewer resources. And it just kind of continues to extract wealth from communities who are trying to build wealth. We're giving them an opportunity to access credit, but that opportunity is too expensive for them. So when I think about access at CCL Fund and at Common Future, we're thinking about who actually defines who gets access to capital, who gets to determine those underwriting criteria, who gets to determine the terms of the credit that's being allocated. And so it's really that what we do is work in partnership with the communities who are most closest to the challenges of not being able to access. The second piece around affordability, we know, as I mentioned, people with fewer resources are charged more to access credit. That's known as the poverty premium. And we kind of treat it in the mainstream financial institutions, or kind of in traditional frameworks of finance. We treat that as a normal thing that we do. It's not something that we think of as inherently bad. But we can see the outcome of that is actually that it has extracted wealth from communities of color. That risk-based pricing, the fact that we aren't thinking about affordability within these communities when we extend credit or capital. So that piece around affordability is really key to the work and is not really seen often. And then the third piece is around building and shifting power. Who gets to make decisions about where capital is being allocated? At CCL Fund, it's not me. It's the communities that we work with. They're making decisions about who can access capital, when, how, where, at what price. All of these things, we're shifting the power away from traditional wealth holders into communities who have, for a very long time, not been able to access capital, and we're allowing them to design for themselves. We're allowing them to create for themselves. We're allowing them to define and self-determine their future. And so I think that's what I feel like is very different about the approach of Common Future and CCL.
Terrific. So I think there's a lot. I'm sure all the audience will have more questions, and I'm sure we will share the resources afterwards, how to find out more about the community credit labs doing and how can we support that. And so I'm going to jump to Nancy. And in the prep work, we did talk about you work with a lot of high net worth investors to find out their values and ask questions, and you share that you have a concept of understanding where the money sleep at night. So it's curious because if you can share your way of finding how can we find the value, that would be great. Thank you.
Thank you. I think the question is, can you sleep at night?
Okay.
Knowing where your money sleeps at night. And that starts with knowing where your money sleeps at night. I mean, a lot of us don't know what we own, truly. And for some of us, this is because we were raised to not worry our pretty little heads about things, right? You know, there's been a lot of patronizing tone around, especially for women and women identifying folks, around their relationship with money.
Yep.
There are also attributes, as Sandhya was indicating, of the financial services industry. And I'm sure, Jennifer, you do a wonderful job with your clients, but there are a lot of people in the industry who use a ton of jargon.
Yep.
You start every meeting with a big, complicated macroeconomic analysis of all the different global, international capital markets and the big bad capital algorithm and interest rates and charts and numbers. And that's all great for people who are into that. But a lot of us don't speak that language natively. And so we go into a little bit of a fugue state around those money conversations, and we forget to ask some questions.
Hi, this is Sally.
We forget to ask, and maybe sometimes we don't feel like that we're allowed to ask, what do we own? We own a fund. What is in that fund? Right? What are the securities? What are the instruments? What are the vehicles? And what are the underlying assets that those securities and instruments and vehicles are taking some kind of ownership over? The answers to those questions don't have to be complicated. Oftentimes they are, but they don't have to be complicated. And there's a ton of translation that a lot of us would benefit from in beginning to understand what we own. Moreover, most of us, and this includes a lot of folks in the financial services industry, it certainly included me when I worked in the financial services industry, don't know who makes money from our money. Not only because we're not experts and we haven't been like spying on the assembly line of these financial products along the way, from the trading desk to the intermediaries to the investment banks to the investment management companies. Who's making money from your money is not clear. It is often not disclosed. It is often not transparent. And it's also a thought process that a lot of us have not been encouraged to go through. So I think if all of us knew exactly who was making money from our money, and then put that up against how we think about philanthropy decision-making, or even our consumer choices, we might feel really uncomfortable. And I'll give you a tiny example. I used to work with an absolutely wonderful investor, high net worth dude. And he used to talk about his 3 daughters and how big a feminist he was. And he used to say to me very proudly and very earnestly, and I love this man, and I'm not impugning his integrity, but he would say, I'm a big feminist. And all of his managers were men. And it began to make me wonder, how many of us think of ourselves as allies in racial justice? And all of the people who make money from our money, from the top of the value chain down to where the money actually lives at night, quite often the composition of that fee stream might make us pretty uncomfortable. So that's what those are some of the questions that I like to ask when helping people think about who makes money from their money, where their money sleeps at night, and can they sleep at night knowing where their money sleeps at night.
it's interesting. I may share a story that I think probably about 7 or 8 years ago, I went to a conference in New York City by a big fund managers, and the whole panel is all white dudes. And the takeaway that I just make a small comment that was probably about 7 or 8 years ago. I said, well, your panel are not diversified. So yes, they are maybe very knowledgeable, but are you sure that their voice, like everyone, is heard, or whether the portfolio managers are seeing all the perspective, right? So I think that's why I'm passionate about. I'm the minority in the whole institution, financial institute, for sure. So I totally understand where you're coming from. So maybe we can also step back a little. There's so many jargon, as you said, Nancy. I think it will be good for the audience, just because we are at a different stage, to kind of just unpack some of the regular terminologies. Nancy and Zendaya, if we can just kind of chime in. It's like impact investing, sustainability investing, ESG, which refer to environmental, social, and governance, and SRI, social responsibility investing. So I think, Nancy, you were saying all these jargons, right? So maybe I will start with you for your take on all these jargon, maybe something that you want to highlight for us, and Zendaya can add to some of that, because I think the community credit lab is doing something a little bit different. It's more one step ahead.
It's a very big topic.
Yes.
When you
we
all
don't
ask,
have 3 hours.
when you ask who has experience, a little bit of experience, some experience, and a lot of experience in values aligned investing, I found myself curious, what part of values aligned investing do people have experience with? I think Elizabeth was going to share a slide here that Sandhya recommended that we use. Thank you so much. So Sandhya, how about if I talk about the left side of this and you talk about the right side of this? So I think what we're saying, we should credit Bridges Capital for this document. They put this together years ago, and it has become a map so the spectrum, this spectrum of capital has become sort of the gold standard in placing different ideas across this spectrum of financial returns. This is not the only way to think about these topics, but it has become something of a standard. So I'll start on the left. Does everybody see this gray stripe across the top that says financial only on the left and impact only on the right? We're going to talk about this financial only column, and then we'll proceed to the right. So everybody knows, I think, what financial only investing is. That's what investing has always been. We look for opportunity to make money in the marketplace. We buy stuff we think is going to be worth more tomorrow. We sell stuff we think is going to be worth less tomorrow. And we hope that over time, we end up wealthier than we were yesterday. And for people for whom that is all that matters, they are in good shape in the current financial services world, because that is the goal of the current financial services industry, is to produce after tax, after fee, risk adjusted, market competitive financial returns. And that is no small thing. And it's not evil either, by the way. Some people might disagree with that, but there's a lot of really important functions that a well-functioning capital market can do. We get to fund innovation. We get to keep the world, the trains running on time, as they say. And also, as a result of only focusing on financial returns, the planet is burning, and our brothers and sisters of color are dying in the streets in some cases. So maybe we can think about proceeding towards a different kind of an approach. And we talk about responsible investing. So many of you have heard of this. This has been around since the 70s. Responsible investing aims to deliver competitive financial returns. We're talking about mostly public stock market investing right now. Some of you may have heard the phrase socially responsible investing, SRI. And in your 401k or your investment life, you may be able to check a box that says, oh, I want to be socially responsible. And all that means is that your stock fund excludes certain stocks in certain industries. Different funds exclude different combinations of supposedly bad things, right? What it says here is that you're mitigating risky ESG practices. ESG stands for environmental, social, and governance practices in order to protect value. I will say that environmental, social, and governance investing, ESG investing, is a stock investing strategy that aims to preserve shareholder value. And it is marketed quite often as a stock investing strategy that is virtuous and good. But ESG, environmental, social, and governance factors are only involved in, they are measured in those kinds of fund investments to the extent that they pose a risk to the financial returns to investors of that investing strategy. So people think ESG equals better, more virtuous, and it does not. It's very confusing, but I hope that clarification is helpful. So it's really about protecting shareholder value by excluding certain companies with certain attributes. And what you want to see, if you're like me, is I don't want to own companies that use child labor in the supply chain. I don't want to own companies that provide guns to civilians. I don't want to own companies in many cases that are using extractive practices. But once you go down that road, you find that the entire economy is built on extractive practices. So nothing about this is as straightforward as it seems. Let's go to the next one, sustainable. These strategies, it says here, adopt progressive ESG practices that may enhance value. What we're looking at here are stock funds. There are some bond funds that do this as well that may vote. So as a shareholder, if you own a share of a publicly traded company, you have a right to vote your shares when it comes to annual shareholder meeting issues that come before the shareholders. Most of us don't know that. Most of us, if we get those proxy vote cards in the mail, we put them right in the garbage because what do they even say and how would I even take action on that? And most of us have advisors and stock managers that discourage our involvement in those shareholder proxies. But occasionally, for those of us who are willing to stick our necks out a little bit and ask for it, we can find stock funds that vote all the shares that are owned by the fund in accordance with a set of stated values. And for people who are wealthy and own significant chunks of individual stocks in their portfolios, even in a separately managed account in some cases, you can actually lend your shares. You keep ownership of them. There's no taxable event. I am not a tax advisor. I am not a financial advisor. I will not be making any tax or investment recommendations on this call. But there are options to lend your shares for the purpose of using those shares to mount proxy shareholder resolutions. So we saw some recent victories there this is the last thing I'll say and hand it over to Sandhya, but there was an issue involving public companies writing forced arbitration clauses into their employee contracts so that if an employee had suffered sexual harassment or assault in the workplace, they did not have a right to a lawyer because they had signed an employment contract that required them to be forced into a private arbitration process. You can see how, as an employer, you might want to clean up your messes in that way, but it's an abhorrent practice. And it was a shareholder resolution that first started to move the needle on that issue. So thank you to activist investors who were able to own those shares in those nasty companies, including in some cases oil companies, but use their voice as a shareholder to make a difference in the world. Last tiny point I'll make here is that a lot of people approach this left half of the spectrum of capital thinking they don't want to own oil and gas companies. And I get that. That is what a lot of people think of as values aligned. I don't want to invest in stuff that feels bad or that I wouldn't want to be associated with. Unfortunately, what happens is that by not owning that company's stock in your portfolio, no one cares. That company, you're not making a difference at all. That company doesn't care if you own it or not. You didn't buy it from that company, you bought it from the other guy, right? So so you're not making a financial difference by choosing to vote with your feet unless you are secretly a $50 billion investor. And if you are, by all means, sell. But the other problem there is that by choosing not to own shares in a particular stock, you really abdicate your right, and I would say maybe your responsibility as a wealthy investor to vote those shares. So I don't want to make people feel that it's all hopeless. It is not. There's a ton you can do, and Sandhya is about to tell you about it. But I do want to underscore that it's not as straightforward as it may seem. Sandhya, give us hope.
Yeah. Yeah, I'll try. So maybe just to start, I'll say everything from responsible through to impact is considered impact investing across the field. So like, if you can imagine, like ESG investing is considered impact investing. And then some of the things that I'm talking about, I'll talk about in a second. And there's just such a wide range. And there's an organization also called Adesina Social Capital that uses a framework that I love as well that fits squarely in here. And it kind of starts at the financial only being extractive. And so kind of, I'm going to return back to the terms that I was using before around extraction of wealth to also just underscore how, when we move across the spectrum, we are actually becoming less extractive and also moving into not only a restorative, but also maybe even a regenerative frame. So yes, I will definitely also share, I think we can definitely share this chart, and I'm happy to share the Adesina chart with Washington Women's Foundation as well. So we'll start where Nancy dropped off, which is in the impact space. And so as you can see, there's 3 columns here. The first one is, I kind of frame this in plain English as you are doing some impact and you're also getting financial returns. You can find opportunities like this in the public markets, traditional markets. There's an example in here which I think is really probably controversial, but also very accurate. The microfinance structured debt funds, from my vantage point, controversial because microfinance has had mixed results. We've seen microfinance be really supportive to some individuals and also really detrimental to the mental health and well-being of others. So just kind of calling that out there, but saying that like there are funds that you can find in the traditional markets where they're pursuing really good impact. I also would include like renewable energy funds, kind of things that take high investment and that also have high financial reward. And there's no, I would say like less of a judgment factor on like where you can, are these solutions good or bad? I mean, I think there is positive impact that can be gleaned from some of these investments as well.
Can I offer some other examples, Sandhya?
Please go for it.
You mentioned renewable energy. Absolutely. I would say that it can sometimes, some of those funds can achieve a market rated financial return. Sustainable forestry can do well. And there is a whole class of regular investment funds, including tech investment funds, that focus on representation rather than equity. So women's tech, like tech funds that invest in women-led tech companies. That is great. That is a very cool impact. Does it lead to a more equitable society? Not much, but it's a cool thing to do and it counts.
Yeah, absolutely. And there, I guess I also will hold that there are many solutions to get us and bring us closer to the world that we want to bring, to live in, sorry. So yeah, we need to try a lot of things. without trying a lot of things, that we're not going to get to the place that we need to go to. And then the second column under impact, moving towards the right, is maybe less tested solutions. So you have impact, they have high impact, they have a desire to achieve high impact, but the returns are not necessarily proven out. They haven't been tested in many marketplaces. They haven't probably been tested. They've been tested in one or two places. It's starting to kind of build, but they haven't really kind of had a strong track record of history of developing financial returns. And also they could have mixed impact returns. So kind of also when I think about this column, you're starting to enter a space where there's a lot more, I don't like to use the word innovation, but there's a little bit more creativity around how these things are structured. It's not very plug and play. It's not very traditional. You'll find terms that might be different than you see in a traditional, more traditional fund. And they'll be trying to achieve kind of higher impact goals. You'll see a lot of these types of, the examples they give here are social impact or development impact bonds. You'll see them being aligned to like the UN sustainability goals. They'll be trying to kind of think very, very, very high level about a large swath of people. How can we use something that you worked in one community and start thinking about it across many different communities? And then the third one here is really, this is a place where I play. So it's the place that gives me a lot of joy. And it is a place where we are thinking about smaller scale, direct impact that doesn't always achieve a market rate or even a below market rate return for investors. However, the reason why I do not like this definition is because it pits one thing against another. It's pitting the fact that you have to have deep impact. In order to have deep impact, you lose financial returns. And what I like to reframe this as is, it's not that we are losing returns, we are gaining community adjusted returns. We are thinking about how do we need to reinvest and regenerate wealth within our larger community. And what does that investment look like? How have I benefited from the extractive economy that we live in? And how do I move capital that I've generated from the extractive economy into developing community wealth, community well-being? And so I like to kind of reframe in this spectrum, in this kind of, in this specific column, that it's not about below market financial returns. It's more about what does it mean for us to generate community adjusted returns? We know these communities have been suffering and being extracted from. How do we regenerate wealth? And regenerating wealth means we have to think about it as a more community and holistic approach. And then finally, and the last one, the impact only, this, I kind of look at this as primarily philanthropic work, negative 100% return. You're giving your money away. You're also receiving, in some cases, a tax benefit for that. So there is, it's not necessarily 100% negative return, but I will leave that philosophizing to a later point. But just wanted to share that this whole spectrum is actually, excluding the financial only and the impact only, considered impact investing. And there are so many places for us to start playing. The kind of the things that I'm focused on all the way at the end of the spectrum that I call impact first investing, those are harder to find, and those are harder to get connected to. But that doesn't mean that we should not engage in anything else because we want to do the most deepest work. The work we will get to there. We will get there. We will get and find those opportunities. It just takes time. So I'll pass it back to you, Jennifer.
Jennifer, before we
I
go,
think,
Oh yeah,
go ahead,
go for
Nancy.
it, Nancy.
a 10-second observation about this before we pull it down off the screen is, first of all, as Sandhya suggested, all investing has impact. Even the financial only has an impact, and it's important that we take responsibility for that. And second, as we go from the left to the right, from regular investing to more deeply considered solutions, liquidity changes. So if you have a financial portfolio of cash or public stocks, you can get your money back tomorrow.
Yep.
And to the right, in the philanthropy column, you can never get your money back. And in the world that Sandhya works in, you get your money back, but it might take a while. And so there's a range of liquidity options as you go from regular investing to solutions-oriented investing. Thank you.
So I think that's actually is a follow-up in terms of, we always, for investing, I think the audience will understand is diversification, right? So you want to have different sleeves for liquidity purposes, for different purposes that you use different strategy for different things. And maybe we can dive in a little bit about the standard of like measuring returns, right? So when Sandhya talk about the return, we are purely measuring what is the percentage of my ROI, right, in my return. But we didn't look at the impact to the community, to certain community that they have been distracting some of they are being detrimentally impacted by our gain, right? So I think in that sense, I want to follow up with the question of how we center equity when we think about the money, how sharing of power, whether we have a lot of money to do or we have our own little buckets to do our work. But equity, being in philanthropy, we are always talk about justice, philanthropy, and do share your view. How can we do our little part, whether it's a big bucket or small bucket? So, Sandhya, you want to go first?
Sure. The way that I think about equity, and I think this actually ties into what Nancy was talking about earlier when she's talking about where does your money sleep at night. Continuing to ask the questions and dig deeper for who is designing, who ultimately is benefiting from this capital, who is supposed to benefit, who actually is benefiting. And, asking that question that Nancy talked about, like, okay, so I'm investing in this racial equity fund, but who's actually benefiting the most? Like, is it the white fund manager who's getting all the fees that's benefiting the most? And so how are we perpetuating? So I think that when I think about how to center equity, it really comes down to who is designing, who has power and ownership and the ability to truly benefit from the capital that we are moving, whether it's investing in a fund, whether it's investing in a direct investment, it doesn't matter. We have to keep digging and making sure that we understand, are we actually achieving the impact, the intended impact that we want with these investments? Because if we aren't, then we're not centering equity. We're not centering the people that we need to be centering in making these investments. We're not thinking about and advocating in some cases for a change to happen. If there's a way for for you as an individual to start advocating for changes to happen, for impacts to be lessened or increased within a community, that's a change that you can do and you can make. So when I think about equity, it's really who has the power in this investment, who is being impacted, and who has power over that outcome. I'll pass it to you, Nancy.
I'm panicking because I might have a terrible answer to this question. Let's find out. I don't think I do center equity in my work. I think I center the investor. And maybe that makes me a bad progressive, but hear me out. Everybody's journey is different. Some people want to do no harm. And what they mean when they say that can be a lot of different things. I happen to believe that we need people on this end of a political spectrum and people on this end of a political spectrum to all do a little better. And I don't tell people what to do, right? I want to find out what pulls at their love and their hope and their shame and their frustration and their can't sleep at night knowing where their money sleeps at night, right? And that we help align some of those pieces and parts and maybe get sand out of the gears of decision making to move it along. But I don't necessarily help folks move it along with a particular direction in mind, because I don't actually know how to fix the problems of the world. So one of the ways I try to do that is, and this is very maybe germane to this audience, is we like to look at the values and the ideas that drive their philanthropy, be they equity as whatever that means to you, right? We all have this evolving sense of social justice. My sense of social justice is real different than it was a few years ago. And I imagine I'm not the only one. So getting very humble about that and about the extent to which our answers today might be what might seem very retrograde 5 years from now, right? Let's start with what are the ideas that are driving your philanthropy, around which we're much more comfortable identifying publicly. I'm a philanthropist of this kind. Great. What are those ideas and those attributes that make sense to pull into an investing context? They won't all make sense to pull into an investing context. But I worked with a woman years ago who said who was very upset about a Washington state legislative effort to create a carbon tax in the state of Washington. And she found that the head of one of the nonprofits she had given a lot of money to over the years was against it. And she was so upset that she said, I am not going to write a check to that nonprofit ever again. And I said, amazing. How much did you use to write to support that nonprofit? And she said, $20,000 a year. And I said, amazing. Do you think your financial services firm was in favor of that carbon tax? And how much do you think you spend on your fees to the financial services firm? So I'm not here to tell people what to do. We're just pulling the ideas that are better developed in some cases in our philanthropic lives and trying to hold them up against our investing lives, which after all have a much bigger footprint for most of us than our investing lives, and seeing what makes sense to implement given our appetite for disruption. One other thing that Sandhya said a few minutes ago was this idea of this proximity principle that we use in philanthropy, the idea being that the people most affected by problems ought to be at the table when solutions to those problems are designed and probably running the process to design those solutions. We tend to not ever take that into consideration when we think about investing. And so so it's not about implementing my idea of what equity looks like. It's really about what are your ideas about equity and philanthropy and climate justice and gender and how you want to live in the world, what community looks like to you. And then what are the implications for the rest of your money?
Yeah, so I think I think there are a couple of good points here that it's an evolving process and is very individualized. So I think value investing in general, it has been evolved substantially, and I can tell you all the fund manager, what has been done. There's tons of, we're talking about trillions of dollars in the system. If we can do something on that, that will be massive, right? But at the same time, it's not from here, from your individual. So this is the resources I have. What is the value that is available? And a couple of things that is really fascinating that I think I will share afterwards is in the last decade, the industry has evolved substantially in a good way. I would say in a good way. And I will use a quote, which is, I think it's really hit it right on it to the point, is do the best you can until you know better. Then when you know better, do better. So I think Nancy heard about that quote before. So I think it is everyone's individual journey, and I think it's to identify what is important to you. So I think with that, we can talk about, some people may have millions of dollars, and as we said, the industry, like the basically the financial infrastructure, have trillions of dollars, and companies are actually stepping up to make sure they're doing better than before. So I think that will be a good thing to know. And if you have millions of dollars, you talk to Nancy directly and do a deep dive and talk to Sanjaya as to put something to the resources of doing some impact. But what if on a day-to-day basis, we don't have a lot of money? What can we do?
I'll jump in, Sandhya.
Yeah.
I'm not a large dollar impact investor. Here's some of the things I've done. I actually was, I'm not trying to pitch Sandhya because she's sitting right here. I was a Patreon supporter of Community Credit Lab for quite some time. You choose your own dollar amount, I think down to $1 a month. Is that right, Sandhya? And you guys did a beautiful job of making that very equitable across the board. There are crowdfunding campaigns. I participated in a crowdfund recently for a local business that drives consumers to local brick and mortar shops owned by BIPOC folks. There is an ETF that Sandhya mentioned earlier. There are a bunch of exchange traded funds that you can either work with your financial advisor to locate, or go to your Schwab account, or whatever it is wherever it is that you go to make investments that you can find. That's tough because you have to do some research, and there's a lot of garbage out there that you really need to sort through. That's where a great thoughtful advisor like Jennifer can come in and help. But there's some really extraordinary ETFs that have no dollar minimums. Hard to find, but I feel great about it when I do. And then, and those ETFs, by the way, some of them vote those proxy shares, like they vote at the company board meeting in alignment with progressive principles. And that's also hard to find, and it's cool to see and to be able to be a part of. And then the last thing that comes to mind is how many people on this call have money at a Black-owned bank? That's easy to do. You can, there's a website, and you guys can send this out, called mightydeposits.com. And I have no relationship with it, but I think it's still there. And you can look up Black-owned banks. You can look up credit unions with a certain percentage of BIPOC ownership. And And you can go and buy a certificate of deposit for as little as, I don't know, what the lowest increment is, but anything under the FDIC limit seems like an easy swap for my local bank branch. So those are some of the things that you can do that are simple, that are not particularly costly, and that could be a switch to flip that would feel really satisfying.
Yeah, all of those are really great ideas. I'm trying to think of one that will actually encompass something different. And what comes to mind is your local community is actually probably starving for money. There are BIPOC owned businesses who struggle to stay open on a daily basis. They're right down the street. There was a barbecue shop that has been struggling to stay open and just recently closed 2 months ago. I think about how do we invest in our community, not like how do I find out if that business needs a loan? No, like how do I invest in place? How do I think deeply about the places that I frequent? If I want to live in a community that embraces diversity, that has deep, rich history, that is equitable, that is inclusive, it means investing in the businesses and getting to know your neighbors and getting to know who is transacting in your community. And so I would just encourage you to think about walking around your neighborhood and popping into the shops and the nonprofit organizations and the other organizations that exist in your area and finding out, can you volunteer for them? Can you buy a coffee from them every day? Can you host an event there? I think there's so many ways that we can activate within our footprint of our community that we sometimes overlook because we're so focused on, oh, I need to move my money somewhere else. But how do we also just invest in place is something I'm also thinking about very deeply as a small I impact investor.
Great.
Gift certificates to BIPOC owned businesses around the corner in the investment in the international district in lieu of crappy corporate end of year holiday gift. Like we gotta think creatively.
Yeah.
Great point, Nancy. I think that's what like our team actually tried to send some gifts to the clients on the holiday gift, and we try to support the business owner, so that are person of color. So I think that the little things that we can do, and I think is to give our focus and energies to our day-to-day practice, both on philanthropic, both on consumer, as an investor. I think I like to highlight what Sandhya was talking about. We only look at, the percentage of return. Sometimes we need to look at a bigger picture. What is the measure we are looking at? So I think we'll go to the last question and then we'll open up for Q&A. So what is your vision? What is your vision for the future in a value-aligned investing? Nancy, I will start with you first.
Just an easy question to end us up with. I'm not sure I know where this thing heads. I'd like to reimagine capitalism. I'm not ready to, maybe Sandhya would disagree. I'm not ready to throw a number board just yet. I hope you do, Sandhya. Let's get together and talk about it. But I think we need a ton of experimentation. And as Sandhya said, creativity. We need to be questioning everything about investor primacy, about what is it that makes us feel safe? What is risk? Really? Like what risks to whom? Right? Safety to whom? What is, and this is Washington Women's Foundation. So where are our ideas of financial security gendered and racial? Where are they? Yeah, right. Like what are the, power dynamics and intersectional ideas that are associated with our judgments and our definitions of what success looks like with money. So that's no small thing. How we get there is continue to ask the questions, continue to pull on the thread of what our assumptions are about what success and failure looks like with money, what safety and security means with regard to money, and really for those of us with privilege to really use that space that we have, that the privilege gives us to imagine a different arrangement for how we make capital decisions.
Yeah, thank you, Nancy. I want to live in a world where all people, no matter their race or class, have power, choice, and ownership over the economy. And it will take a lot. That's not a thing that I will see in my lifetime. It's not. Like, I'm very realistic about that. I'm not deluded. And I think about what will get us there. And I think about the work that I'm doing on a daily basis is very experimental to what Nancy was sharing. The work that I do centers community-led solutions. It centers a non-extractive economy. It centers regeneration. It centers building power in place. And what I would love to see in my lifetime is the work that I'm doing start to move towards more mainstream. I want to see the work that the investments that I'm making actually being accessible on more traditional platforms, that we've widened our ability to think about returns as not just financial returns, but what is that community adjusted return? That's my hope. I want to see the work that I'm doing is no longer niche. It's no longer hard to find. I want to see it on those investment platforms. I want to see people engaging and having people having the option and the choice to say, actually, I don't want a financial return for myself. I want a financial return for my community. And that being an option for people in a traditional marketplace. So I hope that happens in my lifetime. We'll see. I know it will take a lot of work from a lot of people who are constantly agitating and activating for this work to be uplifted, but that's where I hope we go.
Great. So I would just add in the traditional financial institution that it is changing, and I just want to give a positive spin on some statistics. So in 2021, 96% of S&P 500 and 81% of the Russell 1000 company do publish their sustainability reports. It helps. It make it accountable. It make it more transparency, and at least they are open for investors to challenge what they are doing. I think that layer of accountability to the public listed company and the financial institution in general is a good step forward. It's not perfect, but it's definitely, I think, company aware that they need to do good things and positive things to the community in general in order to maintain investor to invest with them. So I think that is actually a good directions to go for. And I agree with you, Zendaya. I hope when we measure the community adjusted return, that became a mainstream. That will be an ideal world that we can accomplish. So with that, I think it will be good to open to the audience. Catherine, can you, or Maria, can you tell me what we need to do to get some question?
Yeah, we invite questions from the audience. Feel free to raise a hand or share in the chat, either way.
Looks like we have one.
So in the
from-
comment, yeah,
Eileen seems to have her hand up.
yeah. Catherine, do you see? I can't see everybody in front of me.
Yeah, I hope I'm saying it right. Colleen?
Yeah, Kylene, thank you. And hopefully we can get to Emily's question in the chat next. Thank you all for this. I mean, yeah, like Emily said, blowing my mind. I wanted to heart everything that each of you were saying and then just didn't. But absolutely wonderful. And I think one of the curiosities I have is the intersection between philanthropy and impact investing. And I'm curious to hear more from both of you about, like, do you view it as a spectrum and there's not really a hard line of where one stops and one starts, and that, you know, especially as women who are trying to make impact in the world, and you know, obviously like the suite of philanthropy and impact investing matters, but I'm curious to hear more from you about how do you think about those things? How do you work with clients who are wrestling with those things? And maybe the solution is just all of it, it's an and rather than an or. And then particularly, I'm curious about this concept of community adjusted returns. Do you mean that like the community would actually financially see a difference in returns as opposed to a nonprofit doing the, you know, impact work? That obviously there are returns and there's impacts, but it's in a different way than just pure finances. I'm curious to hear more about that also. Thank you.
Zendaya, do you want to?
Sure. So I think to the first question that you asked, and I may have lost a couple of questions along the way, so I apologize. But the first question that you asked, I think traditionally people see philanthropy as separate from investing, and now we also see impact investing as separate from investing in general. I would encourage people to think about to Nancy's point, what are your goals? What are the things that you're hoping to accomplish? And what are the tools? These are all tools. Like philanthropy is a tool, impact investing is a tool. Like these are all tools that we can use. How do we right size the tools for the impact that we want to see and the goals that we're trying to achieve? So I do feel like it is a spectrum of opportunity for us. But I would hesitate for people to say, okay, well, I'm only going to dedicate X dollars towards philanthropy this year, my philanthropic work this year, and I'm only going to do X dollars towards this impact investing and X dollars towards regular extractive investing. Think about, like, yeah, to Nancy's point, like, what is your goal and how can you use these tools to achieve those goals? There's a whole wide set of them. And I would encourage you to not be boxed in by the spectrum or by even just the confines of thinking about philanthropy versus investing. And then the second piece around community adjusted returns, the way that I think about that concept specifically is, I'll give a concrete example of an investment opportunity that we have or have used in the past, where is a recoverable grant, where an investor comes and gives us, say, $100,000, and in 5 years we'll give them $50,000 back, and the other 50 that we're not giving back stays circulated in our investment and specifically within our communities. So thinking about, yes, there's a financial component to that, but then there's also a non-financial component, meaning if our community is able to thrive, what does that mean for the rest of, for myself? If businesses are thriving in my community, that also means that I am thriving in my community. I feel connected to my community. I feel a sense of belonging in my community. And those are things that I just can't place a dollar value on. So what does it mean to actually think beyond just the financial return of a community adjusted return where, yeah, there is a financial component of the money not going back to the investor and staying within that community and being recycled within that community. But then there's also the non-tangible. And I'll pass it to Nancy for offer your thoughts as well.
I don't think I have a lot to add. Unless Kylene, you have a follow on.
No, thank you. I'm gonna do some more Googling. Thank you.
Yeah.
I'll say only that neither Sandhya nor I don't think would ever try to talk somebody out of philanthropy, out of giving, right? And it's really just a matter of finding your right stance with regard to all of these different flavors of social impact. I've worked with clients who have a very traditional investment portfolio, have made a few tweaks, and have really doubled down on the higher impact, lower financial return side of things with a smaller part of their portfolio. And then other people can't sleep at night knowing that some of their money is part of the corporatocracy or however they think about it, and they want it all out. And then the question is, how can they find the right financial advisors and the right asset managers to make sure that they're building a financial life and a strategy that meets most of those same needs that a traditional financial portfolio would, but that doesn't have the attributes that are heinous to that particular investor. It's not easy.
I think I'll add one point. It's sometimes the return could be positive too when you invest in some good companies. So they are actually doing better statistically. Because they mitigate certain risks, they actually outperform some of the companies that subject to a certain risk, which is part of the column that you can look. So you not necessarily need to sacrifice the return. You can take care of your retirement. You can take care of yourself at the same time doing good thing as well. So it depends on what resonate with you, what theme resonate do you want. I have clients who are executive, and she is passionate about making sure that she wants to invest in companies that have women on the board. So we build a portfolio like that. There is available, it's doable, knowing that what you matters to you, what do you think that resonate with you, that value, what issue that you want to focus on. So let's jump to another. Do we have another question, Catherine?
Yeah, thanks all. I have Emily's question. I know, Sandhya, you seem like you maybe answered it in the chat a little bit, but I just wanted to say that one out loud, which great praise. I love to see this. This presentation has been sort of mind-blowing. As someone who is starting to figure out how to invest my wealth in a way that aligns with my values, do either of the panelists have suggestions for firms or individuals to work with? If either of you wanted to expand on that.
I can't recommend specific firms or funds because I'm not a financial advisor. I do, however, help people find the right financial advisor for them. And there are a number of great, any financial advisor may be able to do parts of this. And then parts of this are not available through any financial advisor, like Community Credit Lab is not. No financial advisor is funneling money to what's the extraordinary work that Sandhya's organization is doing. I will say Values Advisor is a web resource that lists a whole bunch of financial advisors who have self-identified as being involved in this kind of work. Self-identified becomes it's a little bit in the eye of the beholder, but I think it's much better to have a resource like that than not. Allison Parker is on this call. She works in particular with philanthropic investors around building their strategies and finding their right teams. Some questions to ask of your existing financial advisor include, depending on the issue areas that matter to you, who's voting the proxy votes of the shares that I own? Is anybody? Are we just like sitting back and trusting management to do the right thing? Are they getting voted? That's a good one. Do you work, and for those of you who work with wealth managers who have allocated to private fund managers, that'll be the wealthier among you. Does your financial advisory firm work with first-time fund managers? Many big financial firms choose not to work with first-time fund managers categorically because they're trying to protect their clients and only invest in the second or third or fourth fund. Show me the Black woman financial fund manager that is on their second fund if nobody invested in the first one, right? So you're going to want to understand if they have a diversity of managers, or like, are all the managers on your platform all from a certain kind of background? That's another question to ask. Another question to ask has less to do with the structure of the firm and more to do with the mindset of the advisor. How do you feel? How do you, the advisor, answer questions from clients who are trying to figure out where they stand on owner activism versus divestment? There is no right answer to that question. It is totally like philosophical, religious, like you believe one thing or you believe another, or you're like me and you can see opportunities for both. But that's a way to open a conversation with a potential financial advisor and begin to see how they're thinking about those questions. I'll stop there.
Yeah, I put a couple of resources in the
ahead.
chat. I was just going to say, I put a couple of resources in the chat. One of them, Odyssey Social Capital, that we've been talking about, would be a great resource. And I see in the chat, Leslie put questions to ask their advisors. So they're just a great resource in general to look out for. And then Cordata Capital is another organization to kind of follow and learn from. I know they have cohorts of investors kind of thinking about, to kind of go through that process of thinking about your wealth and what you want to do with it and how you want to invest it. So I would offer those two in addition to the wealth of knowledge that Nancy has as well.
Thank you both. I think we'll end with Marcia's question, which is, does it make sense for a small investor to place one's funds in a company that invests in social and environmental responsible firms to make a bigger impact than one could alone?
Is the question pooling your investment with other investors through a fund, or is it the question investing in a fund like that versus doing philanthropy? Can we get clarification on the question?
Marcia?
Do you want to come up?
Yeah, it's sorry, it's pooling. I mean, trying to make it more have more impact.
Yeah, thank you. I'm aware that I'm talking to a group of people who are part of the Washington Women's Foundation. And my understanding of the extraordinary work that you all do has a lot to do with pooling your thinking and your resources and your hearts and your decision-making strength and your money. I think the idea of pooled giving makes a lot of sense for a lot of people. And if I believe in using some ideas from philanthropy to shape some of your approaches to investing, which I do, pooling your investing absolutely makes sense. I said before, my decision as a individual, not stupendously wealthy investor, to not own the shares of a particular company because I find them dastardly and evil doesn't matter to anybody. The COO, the CIO, the CEO of that company doesn't care if I own the shares or not. But if everybody decides, then that makes a big difference. Sandhya mentioned Odyssey Social Capital, which is an example of the kind of fund manager, public equity fund manager that A lot of people are pooling their money behind. It is not the only one. By doing so, you may or may not have an impact on the decision-making at the company that you own, for sure. But by choosing a fund manager who is loud and proud about what they stand for and how they're using the power of the capital that they invest and the votes and the voice and the power that they invest, you are signaling to the marketplace and to the world and to that fund manager's competitors and to that fund manager's investees that those are the values you're endorsing. You're voting with your feet, and if we can kind of, you want to go far, go together.
So we have 5 minutes. Do you, maybe we can just have summarize maybe a minute for each to round it up for our today's session. I start with Sunday first.
Sure. Yeah, just appreciate the space here to explore the different options for impact investing. I think a lot of times this world can feel very daunting to enter into, not knowing where to start. The terminology, as we mentioned, being wide ranging, the options being not clear. So just appreciate Washington Women's Foundation for creating this open space and just a safe space for people to ask these types of questions. And, Nancy and I are by no means experts, we're practitioners, and by practitioner, but meaning we're practiced and we're in the practice. And being in the practice, like you all can see yourselves as also being in the practice of this, even just engaging in this conversation. So wanted to just share my appreciation for having this space. And then two, I would just invite all of you, and I invite myself as well, to think about what else there is out there that we're not talking about, that we could create a lot of conversation around. You're having this conversation here today. Where do you take this? Who do you talk to about this conversation? Are there friends? We're just talking about collective action here. How do we start sparking this in communities where it's not happening? So how do we take the conversation here, move it somewhere else, continue that, so that we're all starting to move in this direction of centering communities, centering impact, centering the challenges, and centering the place, like the vision that we have for our community, the things that we want to see our communities thriving and excelling in. So I would just hold, like, this was a really great space. How do we create more of that? Where do we take these conversations? How do you see yourselves as agents in that process as well, and myself as well? How do I continue the conversation outside? And I'll pass it to Nancy.
Nancy.
Thank you. I want to say two things. Companies work for their shareholders. Just ask them. The shareholders of companies are often funds, institutional investors. They work for their shareholders. Okay, so who the funds work for? Maybe the investment banks, but maybe they have their own shareholders, right? And you just keep going up the ladder, and it's us. And if that's horrifying to you, it's horrifying to me, because it's a lot of responsibility. And as Sandhya said, we're learners, right? And flawed. So I think we have a responsibility to take ownership of what we own. And as women, there is so much power that we don't have. Our own powerlessness is thrown in our faces all the time. And it's very tempting to say, and someone talked in the chat about having someone pat their head. Whoever pats an adult on the head should be fired, by the way. Our powerlessness is thrown in our faces all the time. But to sit in powerlessness is pernicious. We have a responsibility to take the reins. Then the second and last thing I'll say is that it is scary to take the reins, and it can be. And I just want to acknowledge the fear part here, because what we're doing is we're really questioning the underpinnings of our own privilege. And there's safety and security and enoughness and identity stuff that can come up. That's scary. And if these problems, these environmental and social problems, were easy to solve, we would live in a very different world right now. So it's a tough journey, and I'm so glad that you all are on it. Thanks for having us here today.
Great. I think if what you have right now is, well, you have a traditional portfolio and things like that, there's still resources that you can actually have a starting point to understand where's your value, where will be a good conversation. So I do have a questionnaire, very simple, but that will be a starting point. And then you can actually go from there and build from there. And it's a learning process for individual investors, for all of us, for the community. And I think we want to be here to continue the conversation. I think it's very enlightening, and we should, I think Catherine is going to provide some follow-up emails with all the our contact information, resources that we can provide for you all. And feel free to reach out to us, and hopefully happy investing. And we will get a good community plus return. All right. So that's wonderful. Thank you, everybody. Catherine, would you like to close out the presentation?
Thank you all so much. It's wonderful to see you here. It's good to be together. Thank you so much for engaging this topic. I personally have learned so much today. I know that so many people have. I hope that you continue to explore this topic and make investment changes. And that framework of where does your money sleep at night, I think is really valuable and helpful for understanding where we can go from here. And just again, gratitude. Time is one of our most sacred gifts, and the fact that you have shared your time with us today is meaningful. We want to invite you all to some upcoming events. Our annual Grant Award celebration is happening June 13th in Seattle at the Seattle Asian Art Museum. We hope to see you there. The gallery is open. And if you're curious about our work or want to see what else that we do, please join us there. We will toast to our nonprofit organizations who are doing transformational work in our communities. Continuing on in our philanthropy series, we have a session on donor advised funds on June 29th. Would love to see you there as well. And again, if you're interested in our membership, we would love to talk more about our work with you. So get in touch with one of us. And thank you again to our moderators and our speakers. We hope to see you again soon. And
Thank you so much.
Have a wonderful day.
Thank you.